Hello everyone, and welcome to this presentation of trend trading with candlesticks. Now if you're a current candlestick trader, or if you're planning on becoming one or learning how to use them, this promises to be a really great presentation because we're going to show you how you can really ramp up your odds for consistency with this simple technique I'm going to be sharing with you today. Welcome once again. My name is Primo. I am the president and founder of Specialist Trading, and if you are new to my webinars, my weekly webinars, Specialist Trading is first and foremost an educational company. Now we provide all of our students and all of our members with trading strategies and signals, and we tell them where to enter, where to exit, and where to place your stops on these particular strategies. But we're more about educating you so that you can understand and fully know the process yourself so that you can make your own trading decisions. It's our belief that most traders fail because they rely on an outside source, either someone in a trading room or some system or someone on TV to tell them what to do. It could even be someone down the block who you feel knows about the markets more than you do. That really, in our opinion, is a recipe for disaster. So we're really about educating you so that you can ultimately put the power back in your hands and make your own trading decisions. In fact, look at your trading style right now and look at your trading plan. Do you rely on some indicator to tell you what to do? Do you rely on someone in the chat room or some system to tell you when to buy or sell? We want you to get some sound fundamental education so that you can make your own trading decisions. Now, the reason why we do this is because I have 38 years of trading experience behind me, and I've seen and traded through just about everything imaginable. I started my career on the floor of the Pacific Stock Exchange some 38 years ago. I was on the floor for 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. I traded through the crash of 1987 and through the great bull market that ensued after that. In 1994, I left the floor to manage money and to also become the director of education for a number of websites. And what I've learned over the years is, once again, the reason why most traders fail is because you're giving your power away. You rely on someone or something else to tell you what to do. So we provide all of our students and all of our members with sound education. These are tips and techniques and strategies that I've accumulated in my 38 years so that you can ultimately make your own trading decisions. Now, today I'm going to share with you a great technique for trading candlesticks that will, we feel, in our opinion, ramp up your odds for success. But before we begin, and I show you a lot of slides and show you how to implement this technique, please take a moment to view our disclaimer. I am going to be showing you a lot of performance results with this technique using candlesticks, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer, and while you're doing that, I would also like to invite each and every one of you to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading, at SPCLSTTRADG. You may want to copy that down because I post a lot of great free information on a daily basis, anywhere from daily financial wisdom, ways in which to help you change your mindset for trading, to current signals that we're in that many of our members have taken. So follow us on Twitter, and a lot of you know that our sister site, which is Pro Trader Strategies, they market and promote all of my courses, also has a Facebook account. So please like us on Facebook. Just log on to Facebook and type in protraderstrategies.com, and we have a lot of videos and a lot of more free information as well. We go into detail a little bit more on our Facebook account. Okay, so as I stated, Specialist Trading is first and foremost an educational company. My goal is not to trade for you. My goal is not to simply force feed you with signals so that you blindly take, not knowing the reason why, but as so many websites do. That's not what we do at Specialist Trading. We teach you how to trade with the specialist edge. We don't trade for you. We teach you how to trade. Now, when I first started on the floor, my trading was probably the way most traders trade. It's extremely complicated. I had maybe 20 or 30 indicators on my screen. I was listening and waiting for all the news. I couldn't make a trade until the news came out. I was subscribing to all the trading gurus, and I still couldn't make a dime. I was overcomplicating my trading, and I wasn't consistent. So therefore, that's really what the specialist edge is. Simplicity equals consistency. We're trying to get you consistent in your trading. We're not going to sit here like so many other websites do and promise you the world. After 6 months, you'll be able to sustain yourself and trade for a living. We don't do that at Specialist Trading. What we want to do is instill you with simplicity and consistency in your trading, because that's what will ultimately sustain you 20, 30, 40 years down the road. So it's not about some fly-by-night system or strategy that generates tons and tons of profits, because those can just as easily give them back. It's more about educating you with sound fundamental education that has stood the test of time, so that you'll be able to trade 20, 30, 40 years down the road. So we're going to talk about candlestick patterns today, and before we begin, I know a lot of you probably have a bunch of questions, but if you'll kindly wait till the end of the presentation, probably in the next 30 minutes, and then we'll take questions then, okay? So we'd like to run this like a classroom, so if you do have any questions, kindly wait till the very end, and I promise I'll get to each and every one of them. Now, I know the most popular question that is always asked to me in these presentations is this being recorded? Yes, it is. We record all of our webinars. So if you're having technical difficulties with your computer, or if you have to leave early, you can kindly go to Pro Trader Strategies, and they will send you the link to this recording. All right, so let's talk about candlesticks now, okay? If we look at the most common candlestick patterns as we have displayed here, you see here we have anything from a doji to a piercing line to a shooting star, an evening star, but we don't want to cover each and every one. There's just too many candlestick patterns to cover. Let's take the most popular, and I feel the simplest pattern to discuss and to apply with this technique, and that's engulfing patterns, okay? Now, for those of you who are unfamiliar with engulfing patterns or need a refresher course, this is what engulfing patterns look like. Here's a bullish engulfing pattern, and as you see, it's a two-bar pattern. Bar number 1 on the left is a down day, meaning that you opened and then closed lower. That's why you have the dark body. Bar number 2 on the right is an up day, meaning you opened and then closed higher. The reason why it's called an engulfing pattern is because bar number 2's open to close range totally engulfs bar number 1's open to close down range. So you engulfed the movement of the previous day, all right? Now, why is this, a candlestick pattern that we should be looking for? Well, it has a very strong edge, because usually what happens when you see a pattern like this, there's a strong consistency that we will continue in the direction of bar number 2 for the next 3, 4, 5, possibly bars. So if you see this on a 5-minute bar, you're going to see the next 3 to 5 bars going higher, most likely. Not all the time, but most likely. If you see this on an hourly or a weekly bar, you'll see the next 5 bars most likely continuing in that direction. So there's a strong edge with this particular candlestick pattern. Now, we also have the opposite side of the coin, which is a bearish engulfing pattern. Once again, it's a 2-bar pattern. Bar number 1 is an up day, meaning you open and then close higher, as represented here by the open body. Bar number 2 is a down day, where you open and close lower. So what we're looking for in this particular pattern now is just the opposite of a bullish engulfing pattern. We're looking for bar number 2's downward open to close range to totally engulf bar number 1's. And when you see this, just as you saw the upward bias for a bullish engulfing pattern, now you'll see a downward bias, anywhere from 3 to 5 bars going in the same direction as bar number 2. All right, so that's the basic structure of what you're looking for in bullish and bearish engulfing patterns. Now, here's their standard definition, and here's the way 99.9% of people apply and implement engulfing patterns. I know I did when I first started trading them on the floor. This is the way I used to trade. Now, the engulfing candlestick pattern is a reversal pattern. You see, we have that in quotations there, usually occurring at the top or bottom of a trend. Now, this is extremely important. That's why we highlighted the top or bottom of a trend. This is the way we've all been taught. This is the way 99.9% of people trade engulfing patterns, or for that matter, the majority of candlestick patterns. If we look here at this older chart in CVX, we see here that we are in a clear-cut downtrend. So if we're in a downtrend, what are we looking for? We're looking for a reversal pattern. We are looking for some type of bottom in that pattern. If we're looking for a bottom in a downtrend, then obviously we're looking for a bullish engulfing pattern, which we find right here. So conventional wisdom, everything we've been taught and read, tells us that this is where you want to buy. Obviously, we've hit the bottom of a downtrend. This is where you buy. And then you jump in. You're all excited. This is your first candlestick trade. You're all excited to go here, and look what happens. Look familiar to anybody? All right, so let's say you decided to overview what your course says, and you go back to the presentations or the webinar you paid for, and then you say, well, maybe I jumped the gun a little bit too soon. We're still in a downtrend, and now, lo and behold, what do we see here? We see another bullish engulfing pattern. So maybe this is the one that's going to make back all the money I just lost, and then maybe a little bit more. So you jump in again, and you buy some more, and look what happens. Okay? Now, this is the way most people trade candlestick patterns, for that matter, but bullish and bearish engulfing patterns, because this is the way we were taught. You know, conventional wisdom tells us that they are reversal patterns. But then we wind up, you know, maybe having a handful of good trades, but the majority of them are losers. So we have to ask ourselves, how do we increase our odds for success? Because obviously, a good many traders do well trading candlestick patterns. Here's what we teach at Specialist Trading. Candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. You see how this goes totally against what we've been taught. We were always taught to trade candlestick patterns as some type of reversal pattern. You know, if we're in a downtrend, we look for a bottom. If we're in an uptrend, we look for a top. But that's not the proper way to trade them. The real way to trade candlestick patterns, if you want to have consistency, is to trade them in sync with the trend. Now, here's the only problem. How do we define trend? Everyone has a different idea for what the trend is. I know there's a lot of traders that say, well, okay, the way you define trend is by looking at a higher time frame, and that tells you what the lower time frame should be doing. So if you're trading an hourly chart, you want to see what the trend is on, let's say, a daily chart. And vice versa, if you're looking at a 5-minute chart, you want to see what the time frame is on the hourly chart, okay? Well, that's all well and good, but in my 38 years, I've really found no consistency with that type of way of implementing what the trend is. Well, how about an indicator? A lot of people say, well, you always look at certain indicators, and when they cross, these certain lines cross, moving average cross, and when the stochastics meet with the overbought, oversold situations, there's the trend. Once again, I have found no consistency in applying this as a trend. They work sometimes, and other times they don't, okay? So, what is the best way to find out what the trend is? Well, by applying a tool that I was introduced to first on the floor some 30 years ago, and we call this the PET-D. All right? What does that stand for? We've changed the name to the Primo Early Trend Detector. So what exactly is the PET-D? Well, it's a color bar algorithm, a proprietary algorithm. We don't divulge what the rules are, but it's a very simple formula that must be calculated. When I first started calculating this on the floor of the exchange, we had to do this by hand because we didn't have high-speed computers nor programmers then, some 30 years ago. So we could only apply this to daily bars. But now that we have programmers and high-speed computers, we were able to construct this into a color bar algorithm. So when you see a series of green bars, well, it simply tells you that the short-term trend is up. And conversely, a series of red bars tells you that the short-term trend is down. In my 38 years of trading, this, in my opinion, is by far the best way to discern what the short-term trend is. So it's a fantastic tool. It's called the PET-D, and we apply it to candlestick trading, and this is the way we do it. Let's say we're just looking at bullish engulfing patterns, but remember, we can apply this to anything. It can be dojis, it can be piercing lines, it can be evening star. It doesn't matter. But when we're trading with engulfing patterns, only buy if the engulfing bar, which is bar number 2 of that 2-bar pattern, or both bars are colored green. Okay? Now conversely, if we have a bearish engulfing pattern, well, we're only going to sell if bar number 2 or the engulfing bar or both bars, bars 1 and 2, are colored red. So do you see here, now we have the edge of candlesticks, because there is a certain edge to applying any candlestick, but now we also have accompanied it and the edge of being in sync with the trend. So now we have this kind of candlestick combo where we really feel confident to take the trade and take the signal. Right? Now, we're not guaranteeing you that every trade is going to be 100% winner. Once again, as I said in the very beginning, we are not like those websites that promise you the world and thousands of percent and all these statistics. We're an educational company. We're not a statistical company. We're just giving you sound, fundamental education that has stood the test of time. So let's look and see how we can apply both of these techniques to stocks. I'm going to start out once again by showing you some older charts for educational purposes, but then we'll go in later on in the presentation. We'll show you things that have happened this past week, even things that happened today. All right, let's start with this older chart of GoPro. As we see here, looking at this, well, one would say, well, I don't have enough information to discern what the trend is. I really don't know what's happening. And all of a sudden, we see that we have a bullish engulfing pattern. It's not your standard ideal bullish engulfing pattern, but it still meets the qualifications. Now, at this point, someone would say, well, we're kind of in a little bit of an uptrend, and I was always taught if we're in an uptrend, we should look for a top or a bullish engulfing pattern. I'm not going to go long in the midst of an uptrend. Remember, that's the way we've all been taught. But we want to trade candlesticks in sync with the trend. That's where the consistency is. So if we apply the pet D, what is it telling us? It's telling us that the trend is up. Therefore, if the trend is up, it's okay to take a bullish engulfing pattern signal. And then look what happens, okay? Why? Because you're in sync with the trend. Now, as we go higher here, we see that all the bars continue to be green, but guess what? We have two bearish engulfing patterns. Now, let's say you get a little bit scared. You say, boy, this thing has really risen tremendously. I'm going to go back to my old ways of trading. I'm going to go short, okay? But once you know how to trade with the pet D, you can only go short if one or two of those bars is colored red. And as you see here, they're both colored green. So there's no way we can take this as a short signal. We remain long. And it's a good thing we did, because look what happens. We continue to go higher, and we see another bullish engulfing signal here. You can take that if you want, and we go higher. Do you see how you've put the odds in your favor now, not because you're trying to use candlesticks to pick tops and bottoms, but because you're trading candlestick formations in sync with the trend. You're going with the flow. You have the current at your back as opposed to swimming upstream, which is the way we've been taught. All right, let's look at this older chart of NFX. All right, looking right off the bat, we'd say, well, we are in a clear-cut downtrend, okay? So I should be looking for bullish engulfing patterns. After all, that's what all the presentations have said. That's what all the teachers have taught me. So if we're in a downtrend, I should be looking for some type of bottom with a bullish engulfing pattern. Well, not really, because we want to be looking for bearish engulfing patterns, as we see here. These are the ones we want to look. If we're in a downtrend, but we have to make sure we're in a clear-cut downtrend. So what do? We apply the pet D. All the colors are red, telling us we are in a clear-cut downtrend. It's okay to take those short signals on a bearish engulfing pattern, because we don't know how low we're going to go. So why try and pick a bottom when it's easier to go with the flow? And look what happens. Once again, it's easy to be in sync with the market when you know the current trend. All right, CVX. We showed you this earlier. Remember, this is how most people trade, by trying to pick bottoms, by looking for bullish engulfing patterns. Here was the first one we showed you, and this is the way most traders trade. But if you were privy to having the pet D prior to this, you would have applied that and seen that there's no way you should have taken that long signal. Why? Because in order to go long, you need one or two of those bars to be colored green, and they were still colored red. So you would have totally bypassed this bullish engulfing pattern. And when you had the second one, you would have bypassed that as well, because all the bars continued to be red, and you would have basically stayed out of trouble. So many times, even though the pet D may not generate a signal in sync with the trend, looking at certain candlestick formations, at least it will keep you out of trouble. So it kind of has this two benefits applied to it. It not only will get you in sync with the trend so that you can take signals, but many times it will keep you out, because your current signal is out of sync with the trend. How about ABX? We're looking at this now. In hindsight, obviously the stock was in a downtrend. This is an older chart. Remember, we're going to look at some more recent charts in just a few minutes. But obviously, looking in hindsight, we've been going lower. But if we wanted to take advantage of this, how could we have known in advance that we should be only shorting this? Well, all you have to do is look for bullish engulfing patterns here to tell you that, well, this is where we pick a bottom, right? Nope. This is where you stay out of the trade. So obviously we couldn't take advantage by going short, but we took advantage of the benefits of keeping out of the trade. There's always something to get involved in. There's always another stock, there's another future, there's another setup you can get involved in. So at least you would not have lost any money trying to go long ABX the way most of us are taught. All right, let's look at a recent chart here of Amazon. Now, looking at this chart, this is coming into February, so this is 2 or 3 weeks old here. We're in a slight uptrend. Now, if we look at this here, we had a bullish engulfing pattern. This was just about a month ago. Now, how would we have known to take this? Because at that point, we were really just going sideways. Remember, we need either one or both of those bars to be colored green. Well, we apply the pet D, and bar number 2 is colored green, and that meets all the requirements. So you could have gone long roughly about 300. Now obviously we know that Amazon is expensive stock. We're not saying that you would have bought thousands of shares of this, but you could have applied this to options if you wanted to, because we have a great many students and members of specialist trading who don't actually purchase the stock, they purchase options. Whenever we get a signal, rather than apply it to stock or to future, they purchase options. So you could have gone along the calls here, whichever one you see fit. Now, at this point, it went up a little higher, but nothing really happened, and then conventional wisdom would have, lifted its ugly head again and said, hey, well, Steve, now you have a bearish engulfing pattern right here. Remember, I've taught you that this is where you're supposed to sell, because bearish engulfing patterns tell you that we're changing the trend, that you're at a top most likely. That's the way we've been taught. But are the bars red? No, they're not. They're green. So there's no reason you should take that bearish engulfing signal. So you would remain long, and look what happened. Okay? This was just this last week, coming into this week. You could have remained long Amazon, all because roughly 3 weeks ago you had a bullish engulfing pattern that was in sync with the trend according to the PET-D. As well, it kept you out of that short trade. How about KLAC now? Here's a perfect example of how you can switch trends, because we know that nothing stays in a trend all the time. It will go back and forth. And so a lot of people say, well, Steve, won't you get whipsawed, or won't you get flipped back and forth? Sure, sometimes that will happen, but this will keep you out of trouble and have you switch and reverse many times. For example, the first part of this chart in KLAC was going up, therefore all the bars were colored green. And we see here that look at all of the bullish engulfing patterns on the left that were giving you signals to go long. Now later on, when the bars turned red, you were met with a bearish engulfing pattern. So you could have switched and reversed. Sure, you would have lost a little bit of the money that you made on the prior couple of trades, but you would have gained it all back. As you see, KLAC fell from roughly 76 all the way down to 66, 10 points in about a week. How about Boeing? Okay, once again, this was just about 3 or 4 weeks ago. We see here that all the bars are colored green. So what is this telling us? It's telling us we're in an uptrend. All right? We don't have to look at this chart and come up with any idea of what we should be doing. If we're in an uptrend, we're only looking for buy setups in the candlesticks. If we're in a downtrend, we're only looking for sell setups in the candlesticks. It's that simple. Remember I said at the beginning that most traders fail because they overcomplicate their trading, but simplicity is what equals consistency. So keep things simple. If the bars are green, we're buying. If the bars are red, we're looking to sell. So since the bars are green, we look for a bullish engulfing pattern. And we had two right here just about 3 or 4 weeks ago. So this is telling us to stay long. Now obviously it went up a little bit, but then it came back down. Should we have sold and gotten scared? No, the bars are still green. So we remain long, and look what's happened with Boeing coming into this past week. How about VLO? Okay, now coming into this, this was in January into this past week. We see the bars were red, telling us we're in a downtrend, and then they switched roughly about 3 weeks ago to green. All right, once they're green, we look for bullish candlestick patterns. Since we're looking at engulfing patterns, here's where we had two, roughly at 52 and 54, and so you could have made a good 5 or 6 points taking any one of these signals. This was this past week. How about MOS? Okay, right off of face value, someone looking at this who doesn't know how to trade with the PET-D or never applied it before would say, well, Steve, there's no trend here. In fact, we're in a range, so I'm not going to do anything. I don't like to, I've always been taught you don't trade rangy markets because you'll get whipsawed. Well, that is true. That can happen from time to time. But if we apply the PET-D, remember that's the early trend detector, oftentimes it gets us in before a trend is established. That's how sensitive it is. And it can fine-tune the trend much better than anything we've ever seen. So if we apply the PET-D, we see that, well, we have a bullish engulfing pattern, and with the PET-D, that second bar meets the requirements, telling us that it's okay to take that setup. So that's a proper setup to go long, even though it looks like we're not in any trend, and look what happened. Coming into this week, you could have gone long around 46, and the stock goes up about 5 or 7 points in the next 2 or 3 weeks. How about XLNX? Once again, this is coming into the beginning of this year, just about a month or two ago. The bars turned red roughly at the end of December, so this means we're only looking for negative setups, for setups to go short. We're not going to think about picking a bottom. We don't care what the candlestick pattern is, as long as it's a negative pattern, a pattern telling us to go short. Well, we had two setups right here to go short, two bearish engulfing patterns at 44, and look what happened. In the next 3 weeks, went down to 38, so roughly a good 5 or 6 points in the next 3 weeks. All because you took a simple pattern that was in sync with the trend. How about VEC? Okay, we have a bearish engulfing pattern right here. This was just last week, a bearish engulfing pattern, okay? Also, the very next day, we produced a bullish engulfing pattern. So someone looking at this would say, well, which one do I take? I've often been taught that, we've been going up, so I should take the bearish engulfing pattern because that means we're hitting some type of top. We don't think that way anymore. We only want to take the setup that is in sync with the trend. All right? So a bearish engulfing pattern needs to be colored red. A bullish needs to be colored green. So if we apply the PET D, what do we see? Well, all the bars have been green for the past 2 or 3 weeks. Therefore, there's no reason to sell anything. We're only going to look to go long. So we would have purchased VEC roughly about 29.5, 30, and it goes up a couple of points in the next 2 or 3 days. This was just this past week. And how about commodities? Okay, here's GLD. That's the ETF for gold. All right, gold was had a nice run up as of late, but then it started to pull back. Let's say you think, well, it's just a sell-off, and I'm going to look for a bottom to purchase gold because, coming into the first week of February here, we've gone up quite a bit, and now I want to buy it on this nice pullback. All right, that's a fair enough way to trade. We have a number of strategies of specialist trading that only trade off of pullbacks. But remember, just like anything else, any strategy, in order to go long, we need the bar to be colored green. We need one of the two bars to be colored green. So if we apply the PET D, we see that, first of all, there's a bullish engulfing pattern right here. So this is where we need to find bar number 2 colored green. If we apply the PET D, we see that bar number 2 is colored red. The PET D is telling us that we're still in a short-term downtrend. So you would not have taken that buy signal, and look what you would have bypassed. Once again, the PET D will keep you out of some bad trades from time to time. And sometimes the best trades are the ones you never take. And then lastly, we all know what's happened with crude oil. It's had a nice bounce as of late, but from August all the way into the beginning of the year, we had a tremendous, tremendous downtrend. As you see here, we have crude oil from October to December, and it's fully engulfed with red. Why? Because obviously it's been in a downtrend. So we want to take advantage of that. There's no way we are thinking of trying to pick a bottom in crude oil. As long as the bars remain red in this example here, we're only looking to go with the flow. This means we're looking for bearish engulfing patterns, which we see here. We had 4 times to go short. I don't care how low some Fibonacci level or some support and resistance plan is telling you you should buy crude oil here. Don't worry about that. Just go with what the crude oil market is telling you. If it's telling you it's going lower, jump on board. If the river is going in one direction, just start paddling in that direction with it. Don't try to paddle upstream. So the PET D is telling us that the river is going south, that the trend is lower, so all we're doing is selling with it. We had 4 chances to go short, and we could have taken advantage of that from December all the way up until February of being short crude oil. The only way people lost money trading crude oil was trying to pick a bottom. All right, so we looked and gave you a lot of examples of stocks. How about the E-mini S&P? Here are a few current signals on the E-mini on daily charts. These are overnight session, and as you see here, we have a first setup, which is a bearish engulfing pattern, and then a week or two later, we have a bullish engulfing pattern. How do we know whether we should take these? Let's just say you trade the E-mini overnight. All you have to do is apply the PET D. All right, now in the first example, bar number 2 was colored red, so it meets all the requirements, and it didn't go down a lot, but it went down a good 30 points. That's about $1,500 per contract, so that's a nice trade you could have had. And then the second trade, a bullish engulfing pattern, both the bars are green. So that's a double whammy telling you that it's okay, you've been confirmed to take this trade, which has gone into the current rally we are experiencing. Okay, roughly about 50 points or $2,500 per contract. Now we realize that not everyone trades the E-mini overnight. That's an expensive contract to hold overnight. So what if you want to apply that to a 10-minute chart? Well, this was from this past month in the E-mini on a 10-minute time frame. We see here on this day the market was going up. All right, most people, the way we've been taught, if we've gone up, we're looking for bearish engulfing patterns. But now we know that doesn't apply anymore. There's no reason to trade that way. So we see here that we have two bullish engulfing patterns right here. All right. So this may be a little frightening to take because you've always been taught you never look for bullish engulfing patterns. So how do we know whether we should take those? Well, we just simply apply the PET D. And the PET D is colored green, so we don't have to be worried. We can trade with confidence knowing that we are in sync with the trend. So all we have to do is stay long, and it doesn't look like we would have made a lot, but that's a good 5 points on this 10-minute time frame. Now let's say we never sold and continued to remain long. Well, the bars are still green, and guess what? You have another bullish engulfing pattern. So you could either use this to tell you to stay in the trade, or you could purchase more contracts, and it goes even higher. Now at this point, you've got a nice profit, but you're starting to get a little bit scared because you're in an uptrend, and lo and behold, you see a bearish engulfing pattern. You've always been taught this is where you go short because we've gone up too high. The indicators tell you you're overbought, or you've reached some Fibonacci level, or you've reached some resistance level. All right, we don't care about those things. There's no consistency in that way of trading. The only consistency lies in when you're in sync with the market. That's it. We're not going to try and pick what the market's doing. We're just going to go with it. So if the market is going up, as exemplified by the PET D, we're not going to take this short signal. And they're all colored green as well. It's a good thing we didn't, because look what happens. We only want to be in sync with the trend when trading candlesticks. Now you can go to a smaller time frame. Let's go to a 2,000 tick bar chart. Once again, this was the past couple of weeks. The trend was up, and looking at this small example here towards the end of the day, we see that we had three signals. We had one bullish engulfing pattern, we had a bearish engulfing pattern, and then followed by another bullish engulfing pattern. Which ones should we have taken? Which signals? All right. In order to go long, we need the bullish engulfing to be colored green. Bar number 2 must be colored green. In order to go short, bar number 2 must be colored red. That's all we need in order to take that signal. So we apply the PET D, and we see here that all the bars in the requirement stages were colored green. So you would have bypassed this sell signal and just taken the long setups. And it was a good thing you did because the market continued to go higher. But we're not going to cherry pick all of this because we know sometimes the trend does have to change. So the beauty of applying this technique is that the PET D is such a fine-tuned trend identifier that even though it's not going to get you out at the top or get you in at the bottom, it will switch in reverse so that you can at least get in before many people know that the trend has even changed. Now, as we see here that you're currently long, let's say roughly about 1950, you've got about a 6-point gain. And as we're continuing to track the trade, we have more confidence that we're going higher because we have more and more bullish engulfing patterns. But as we get to this point, we have a bearish engulfing pattern. But now that you're a seasoned student of mine, you know that you shouldn't take that as a short signal because, well, there's no consistency. That'll work maybe 1 out of 5 times. So you don't take that. You continue to be long, and the market does in actuality sell off, but you have another bullish engulfing pattern, and all the bars remain green. So even if you don't want to pick up any more shares or any more contracts, I should say, you stay long, okay? You're still long. You have about a 4 or 5 point gain. So the next bar generates a red bar. Okay, well, that gives you a little cause for warning because this is the first red bar you've had since that first setup. But you do a little bit more research and you see that that's a bearish engulfing pattern and it meets the requirements to go short. So you exit your long side and you've got roughly about 3 or 4 point gain. That's not bad. You still got some gains out of this, and you switch in reverse and go short because it's a valid signal to go short according to the PET D as applied with the candlesticks. And guess what? The PET D got you in before most traders would have known the trend has actually changed. Now, we can still apply this to another market, the Forex markets, for all you currency pair traders out there. Here's an older chart of the dollar-yen. Now, the dollar-yen has been going straight up, as we see here. This was roughly about a good 6 months ago. But if we apply the PET D, we know that all the bars are green. So this tells us that we are in no way going to try and short the dollar-yen. We're only looking for buy setups, as we see here. We had 4 great buy setups just looking at the bullish engulfing patterns. And look what happened. Dollar yen continued to go higher and higher and higher. This will work on the downside. As we see here, the euro dollar is in a downtrend. This was last year, okay? But we want to make sure that we're in a downtrend, so we apply the PET D, and yes, all the bars are red. So this means we're only looking for bearish engulfing patterns. Now we see here, we have a couple of bullish engulfing patterns right here. We had two bearish engulfing patterns that worked fantastically right at the top. Are we going to take these two signals to go long? No. We don't believe in trying to pick a bottom. Remember, that will work maybe one or two times, but the times it doesn't work, you give everything back. So there's no consistency in trying to pick tops and bottoms with candlestick patterns. There just isn't. It will work a few times, but the times it doesn't, you give everything back. Remember, I stated, we want you to be trading 20, 30, 40 years down the road. We're not promising you the world with all these statistics that generate thousands and thousands of percentage points. We don't care about that. We're only interested in providing you with sound, fundamental information that has stood the test of time. When you trade with a trend, you'll have higher levels of consistency. All right, so let's recap before we go to the question and answer portion. Only buy or sell candlestick patterns. It doesn't matter which one. It could be doji patterns, it could be piercing lines, it could be evening stars, morning stars. It doesn't matter, but only buy or sell these candlestick patterns that are in sync with the PET D. And why the PET D? Because the PET D is the best source of trend identification that we know of, better than any other tool. Now, we have other tools for identifying the trend, but they're not as refined. They're more of an overall approach for identifying what the trend should be. The PET D is more fine-tuned. It's more sensitive to telling you in advance, many times before anyone knows, what the trend is. So regardless of what candlestick pattern you're trading, regardless of what style is someone you have in a course you've taken, someone you've spent thousands and thousands of dollars for to get this information and you've still not seen any results, all you have to do is apply the PET D. We're not saying that candlestick patterns don't work. We're saying that you just have a higher level of consistency once you're in sync with the PET D. Now, a few things to remember. These are extremely important. What we've shown you today is not a complete strategy. I haven't told you anything about where to place your stop. I haven't told you anything about advanced entry signals. I haven't said anything about where to get out, where to exit, okay? We haven't talked at all about money management. These are extremely important pieces of the puzzle to any strategy. You need to know each and every one of these things. They're extremely important, and we didn't talk about any of them. All we shared with you is how to trade candlestick patterns, how to look for these setups within the trend. But we didn't talk about where to buy, where to place your entry order, where to place your exit level order, where to place multiple exits, where to place your stops, how to track a trade while it's going in your direction. How about money management? How many shares, how many contracts you'll be trading? All right. A good many of you don't have a strategy. You've just learned about candlesticks, and perhaps the strategy you're trading you're not happy with. It doesn't meet your needs. Maybe it doesn't trade enough. Maybe it trades too much. Okay. Well, what if I could provide you with a great strategy that focuses on a candlestick pattern and applies with the PET D? This is our candlestick combo that I want to share with you today. This is a 2-for-1 attendee special for all of the people that have attended today. We're giving you one of our best methods, best and most consistent methods for trading candlesticks. That's strategy number 5, along with the PET D. All right, this is an online course, so you don't have to wait for anything to be shipped or mailed to you. You get instant course access, detailed instruction, up to 5 videos. We teach you all the entries, all the exits, and all the stops. We provide you with signal alerts, so you know exactly when a signal has been generated, and you have access to contacting me whenever you'd like. You have my personal email address, so you can ask me questions whenever you'd like. In fact, let me show you some recent examples trading strategy number 5 with the PET D. Now, here's a perfect example here in Starbucks. This was just about a month ago in January coming into February. Once again, someone would say, well, there's no real clear-cut trend here, so I'm not going to do anything. Well, here's where we generated a signal to go long. All right, this was on the 16th, just about a month ago in Starbucks. Now, a lot of people would say, well, you know, I've been burned a lot with candlesticks or with any strategy. How do I have the confidence to take these trades? Well, we just apply the PET D. Once again, all we need to see is that the setup bar is colored green, and in this case, it was. So the members of strategy number 5, as well as the PET D combo course, could have taken this signal, and you could have generated 10 points in 2 weeks taking this signal. Also works to the downside. Here's a signal that was generated in GoPro. This was just on the 4th. This was just a couple of weeks ago as well. You see here that it was verified. It was confirmed by the PET-D to go short because the bar was colored red. So members of the Candlestick Combo course could have taken this and you generated 8 points in 1 week. Now just to show you that we're not cherry picking, let me share with you something that happened today. Excuse me. In fact, this just happened 3 hours ago. I took this setup right in the opening today. A lot of people say, well, Steve, I don't trade stocks and I don't trade currency pairs and I don't trade overnight. I trade intra-bar. I trade small time frames. You know, I know you can get whipsawed a lot. How does this apply to intraday trading? Well, here's a 500 tick bar chart of the E-mini from this morning. Now, someone could say, well, it doesn't get any smaller time frame than this. But we have a great many members who do trade tick bar charts. So let's just say you're trading the E-mini on a 500 tick bar chart. These were the signals that were generated using strategy number 5 to go short. All right. We have the first one here just in the first moments of the day. We have another one generated here. Both of these would have generated at least a point or two. We have another signal that was generated here that probably would have broken even if you traded our more conservative approach to this style, which we teach you in the course. If you were more aggressive, you would have been stopped out with a small loss. But you would have made it back in the next 10 minutes by taking this long signal here. But remember, once again, you not only get strategy number 5, you get the PET-D. So all the sell signals must be colored red, just the way we taught you, and all the buy signals must be colored green. So do you think this could have helped you this morning? These are actual strategy number 5 sell setups that could have been taken by our members, and each one would have been profitable except possibly this one where you may have been stopped out with a small loss or at the very least been broken even with this trade, but you could have made it all back on this long setup. Okay? This is the candlestick combo in action from just about 3 hours ago. So once again, we're giving you this 2-for-1 at 10D special. Primo Candlestick Trader Strategy number 5 is extremely consistent by itself. But when you add the other technique, which is the PET-D, you're increasing your odds for success even more. So you see the validity and you see the power behind both of these techniques, but they're extremely expensive if we offer them separately. In fact, if you purchase these separately, it would cost you close to $3,200. But for all the attendees today, we're slashing the price nearly 40%, down to $19.95. So you get both of these extremely powerful, consistent techniques for $19.95, and we're not stopping there. We're also including payment plans. So for the amount of one small lump sum, you can start trading and start getting all this information as early as today when you construct some type of payment plan with the people at Pro Trader Strategies. So if you're really serious about taking your trading to the next level with candlesticks, if you want to be in sync with trading the PET-D, I strongly urge you to take advantage of this deep discounted offer we have for our candlestick combo. So here's how you purchase this, and here's how you can contact us if you want to structure some type of payment plan. For more information, please go to our sister site. That's protraderstrategies.com. They market and promote all of my courses, all of my different strategy courses, especially the candlestick combo that we're offering today. And you can talk and email to any one of the trading consultants at Pro Trader Strategies. You can email them at trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677. Now, if you're ready to jump on board and you want to take advantage of that deep discount, you'll see the link we provided for you on the candlestick combo on the right. It's in your chat box. All you have to do is just simply click on that link, and it will take you to the sign-up page, and you can be up and running in a matter of moments. You can be studying all the material and contact me today with any questions, okay? So that's the way to get this deep discounted candlestick combo that we're offering. It's brand new. We've never really offered this other than we just started in the past week or so. We've had tremendous response. You've seen a lot of the examples I just gave you. We had some older examples going back in this past year, but I showed you examples in the past couple of weeks. I even showed you an example from 3 hours ago of how well these two techniques work. Okay, so let me open up my question and answer box. I want to thank you all for taking time, if you had a question, to holding off on it, and I will try and take these in the order in which they were presented. If you give me just a moment to scroll down here. Let me just scroll down to the very beginning. I see there are a lot of questions. Okay, Jan is asking, where do I get the tool? Well, Jan, I think you asked that pretty soon, so here's all the information. Once again, the tool is available right here at ProTraderStrategies.com. It's a proprietary tool. Once again, we don't divulge what it's based off of, but you know, we stand by our word. I basically have been using this for over 30 years. I use it on a daily basis. Do a Google search on us for people that have applied the PET D. You'll see what success they have. In fact, we have people trading this in the Indian markets. We have people trading this in the South African markets. That's how well this tool transfers over onto any market in any time frame. So it's extremely well at fine-tuning and identifying a short-term trend, regardless of what the market is, regardless of what direction. So once again, the PET D is not a system, it's not a strategy, it's a trend identifier. It's a color bar algorithm that simply colors the bars either green or red. If you have a series of green bars, it's simply telling you that the trend is up. If you have a series of red bars, it's telling you the trend is down. Therefore, you don't have to do all this work. You don't have to go back and look at a different time frame and two charts telling you what the trend is, that they're in sync. You don't have to use all these special indicators and convoluted logic telling you what the trend is. All you have to do is see what the color is. It's that simple, okay? So we've made it extremely simple, and then the best way to apply it with our candlestick strategy or with any strategy you have is to simply confirm it with the color. So in other words, if you're using a particular strategy, let's say it's something you came up with on your own. If you get a buy signal, the color of the bar must be green. If it's not, don't take the signal because most likely you're out of sync with the trend. Now, let's say you have another strategy that gives you a sell signal. Well, if the bar is red, you have the confirmation to take the trade. But if the bar is green, don't take it because the PET D is telling you you can't sell in an uptrend. It's extremely simple but extremely powerful, okay? Gerard is asking, is the PET D only useful on a daily chart? How about hourly? Yeah, Gerard, I showed you a bunch of examples on tick charts. I showed you minute charts. I showed hourly charts. I also showed daily bars. So the PET D will work on any time frame. Anywhere there is a trend, you can apply it, okay? Jan asks, can you just sell when the color changes? Well, we would not advise that because, once again, that would be using the PET D as if it is a strategy. It's not a strategy. Now, if you have a strategy that it confirms with when the color bar changes, yes. In fact, we teach that in the course. We give you many setups with strategies where we say, you know, to go long, but you can't go long yet because the bars are still red. Once the bar turns green, then yes, you can go long. But you have to have a strategy or a plan associated with it. We can't just be buying and selling just because the color bars are changing, because there's no purpose to that. We're just, you know, trying to go off trend, and you know, that would be similar to buying once price closes above a moving average and selling once, you know, every once in a while it'll work, but you may get whipsawed doing that. Let's see. Someone is asking, Roy is asking, can I look at a specific chart here, DE? I'm sorry, Roy, I don't have access to real-time charts right now. I just have access to a PowerPoint presentation. What systems do you need to get the PET D indicators, and what do you use to screen for your signals? That's a good question, Tom. Well, when you say what systems, you're talking about what charting platforms. You can apply the PET D to TradeStation, to Metastock, to MT4, and to NinjaTrader. So any four of those, it works fine. You can even apply it to Thinkorswim, but there's certain things you have to change a little bit. You have to work together with our tech support in order to get that on Thinkorswim. It's not as easy as it is, let's say, with TradeStation and NinjaTrader. But those are the platforms it works on. Same thing with strategy number 5. So it's very simple. We have a great tech support department. They can help you set it up, and so you can be up and running real soon, okay? Tom is asking, is this recorded? Yes, it is, Tom. If your computer crashed or if you came in late, simply contact the people here at ProTrader Strategies and they can send you the link, okay? Can you briefly compare the PET D to the Ichimoku cloud indicator? Thank you. Well, Fernando, I personally don't use, that's a good question. He's talking about another cloud indicator, the Ichimoku charts, but I don't use them. And really, the PET D pretty much covers everything. It's a lot simpler. I know people have used the cloud, have said that there's certain requirements and things that must be met. We don't really have that many requirements with the PET D. The PET D, all the PET D does is tell you whether you should be long or short. So I would basically say the reason why I've stuck with the PET D is because it's so simple. Remember, I stated in the first 5 minutes, the simpler something is, the more you will be on that road to consistency. Okay? Let me see here. Any more questions? Siriana says, how much of a back testing has been done with the PET D? Well, first of all, before we go into more of that, there's no way you can back test a tool. That's like saying back testing the 100-period moving average. Well, back testing it for what? Or back testing a oscillator. How do you back test it? Yeah, there's no way, what time frame or what direction or what are you back testing it for? So remember, you can't back test something that identifies trend. What time frame, what market, how are you applying it? So the only way you back test things are systems. Things would tell you the same thing over and over each and every time in one specific market. As I stated at the beginning, we are not a systematic company. We are an educational company. We're giving you sound tools that have stood the test of time. So it's up to you to decide whether to use these. But as I said, we stand by our work. Our integrity is our guarantee. In other words, I use these personally. Most of the people in our offices use these. And as well, if you do a Google search and look at a lot of the people that have purchased our products, you'll see that they have a higher level of consistency. Not to say that this is going to be happening with each and every person, but we have people who have told us, they've written us testimonials that they've now been consistent for the first time in their life. They've been trading for years, decades, and for the first time they've been able to become consistent because they're applying our strategies and our techniques such as the PET D. So this is all we're trying to instill in people. If you're having difficulty doing that, if it's not working for you, it's most likely that you're getting in your own way, that you're overthinking things, because that's the way we've been taught. I know personally that's the way I was taught. Once I started simplifying things and just letting go, that's when things started to become a lot easier. Okay, so you can't back test a tool because, like I said, it'd be like back testing. It would be similar to back testing stochastics. How do you back test stochastics for what? I mean, where's your criteria based off of that indicator? So therefore, you're asking about win-loss ratios. You're asking about back testing. We are not a back testing company. There's a reason why every webinar, every presenter must put a disclaimer on there saying that there's no way we can guarantee that past results will be repeated in the future. So that's why we don't believe in statistics, because most things aren't represented by what they did in the past. They change, they alter. So we don't go in that direction anyway. So there's a reason why we have to place that disclaimer, because the markets are always evolving. Our job is just simply to evolve with them, to be in sync, and that's what the PET D does. All right? We're not going to tell you to trade the exact same way every time the way a system does. We don't believe in that. And that's the only way you can come up with statistics, if you trade a system. Okay, I hope that answers your question. GD says, I missed the first 12 minutes. Sorry about that, GD. Where do you get the PET D? Well, the PET D is right in front of you. If you're interested in taking your trading to the next level, that's where you get it. Contact the people at Pro Trader Strategies, and they can set you up with that great combo we have. Remember, you're not just getting the PET D, you're getting strategy number 5. Strategy number 5 generates really consistent results on its own. But coupled with the PET D, you're just highlighting your odds for success. So the PET D is a great tool to highlight any strategy, but strategy 5 is a great strategy. I mean, I went over roughly 100 slides showing you how well it works in any market and in any time frame. Monty says, thanks, Stephen, for a great program. You're more than welcome, Monty. Thank you for attending today. Appreciate it. Gerard says, what other indicators could be used to enhance the trade selection with PET D and candlesticks? Well, that's pretty much in the course, but remember, once you start piling on indicators and tools, you start complicating your trading. I hate to say it, but I got to go back to the beginning. The very first thing that was taught to me is simplicity equals consistency. So you don't simplify your trading by adding on more indicators and more things onto your plate. So we really have maybe 1 or 2 indicators at most in any of our strategies. And we look at maybe 1 or 2 patterns, okay? Very rarely do we have more than that, more than 5 rules. So we don't like to add on a lot of indicators because we're only overcomplicating, and when you overcomplicate something, you're taking yourself out of the game. We don't want to do that. We want you to make the trading decisions, okay? I hope that answers your question. Doug asks, hello, is this a black box trend indicator? Well, a black box, it's in a sense, Doug, but black box refers to a system, meaning that it has a set of rules telling you where to buy, where to sell, where to exit. That's really what a black box is. I've traded black boxes before. I've even taught black boxes. And there's no consistency that I've found over the years. They work great until they stop working. Whereas the Pet D, in a sense, is black box. It's more proprietary because we're not divulging the rules because we have hedge fund traders and we're thinking of possibly licensing it in the future. So we want to keep the rules in-house at this point right now. But in terms of how it's applied, we teach you all of that, how to apply it and how to use your own discretion on how you want to apply it. So it's not a black box system that generates buy and sell signals. It's more of a proprietary tool with the rules are kept in-house, but we show you and open up the doors and share with you all the ways in which to apply it. We even share with you some of our members' suggestions of what they discovered, in which we encourage all of our members to share their different ways in which they use it. So there's a lot of different ways to apply it. We don't keep a secret on that. Okay. Let's see. Siriana is saying, what platforms are there supported? Yes, TradeStation, NinjaTrader, MT4, as well as Metastock and Thinkorswim. But there's a slight altering of the Thinkorswim program that you have to do. It's not difficult at all. It's very simple. But we work with you on that so that you can have it up and running with that. Frank is saying, can we use this method with or without the 50-period simple moving average? Yes. In other words, we also apply the 50-period moving average as an overall trend identifying tool. All right. Now, you can be more conservative and apply that with the Pet D if you'd like, or you can just use the Pet D for what it is. It's up to you. This is where we say we can't backtest anything because some of our students like to apply the Pet D with the 50-period moving average to tell them, that it's okay to take the trade. Others say, I'm only going to apply the Pet D. It's okay. There's no right or wrong answer. It just depends on how you want to structure the setup. So it's entirely up to you. That's why, we're an educational company. We don't have the manpower, nor it's not our philosophy to go and backtest every 1,000 ways in which to trade this. There's a number of ways in which to do it. Okay? Siriana is asking, I'm sorry, hopefully I'm pronouncing your name correctly. I'm sorry. It's Srinivas, possibly. I'm sorry, but it says, what kind of support do we get in the beginning and ongoing? Thanks. Those who buy now get lifetime access and support. Okay, so if you purchase now, you get lifetime access and support. It's nothing, whereas, well, it's good for 2 weeks and then that's it. We have a great tech support system with us. We have, people that will help you along the way. Sure, there are problems with people using it on certain platforms where they don't understand how to upload it. We have a tech support department that will help you do that. But if you do it now with this 2-for-1 attendee special and this discounted price / nearly 40%, you get lifetime access and lifetime support. Okay. Monty says, for that price, how long do I get to use the Pet D? Well, lifetime. That's, once again, we are thinking in 2015 of possibly applying this to having it for monthly payment. I'm sorry, not for monthly, for yearly payments, because we've had an interest in possibly accessing this out to hedge funds where they want to lease it. So therefore, we would have to lease it to everyone on the same price. Therefore, the price would go up, and you'd have to pay every quarter. But if you act now, it's just you're paying once, and that's it. It's yours for life. So there's nothing you have to, step up, and there's no upgrades. I've been using this for 30 years, the same thing. There's no upgrades I've attached to it. There's nothing that has to be changed or altered according to market conditions in order to meet the needs of the Pet D every couple of months. I've used the same settings for the Pet D for the past 30 years, so nothing has changed since then. That's how remarkable and how powerful a tool this is. So if you act now, before we possibly go into licensing it, it's yours for life. There's nothing you'd have to pay anything extra. Plus, you're getting Strategy 5 in this 2-for-1 attendee special. Let's see, Gerard is saying he can't use Ninja for stocks. Data costs are prohibitive. Many of our members do use Ninja for stocks. Sometimes it's free. So contact the people at Pro Trader Strategies, and they can help set you up and possibly point you in the right direction, Gerard. Okay, Val is asking a very important question. Once again, we always have to go over this. People are usually very interested, but they want to know what the return policy is. Please remember, Val, that we are giving you things that have stood the test of time for a number of years, and once you get them, they're yours, okay? You can use them forever. Even the strategy, you're getting all the strategy rules. You're getting my 38 years of experience, things that have taken me 38 years to accumulate, and then you're given all the rules and everything, things that have taken me that long to learn. Plus, you're getting my learning and my education. So for this reason, we don't have a standard money back guarantee. What we do offer, though, is a 30-day exchange for any other product we have. We have tremendous products. So if you're not happy with what you currently get, you can give it back to us. Even though you could have just as easily recorded and given all the rules to your friends and everything, we will, in good faith, take back everything and then give you something else. We have a number of strategies. We have upwards of 10 different strategies in each market, anywhere from pullback strategies to continuation strategies to entry techniques to things such as the PET D. So in good faith, we will take what we gave you, any product, and then exchange it for something else that you're interested in, okay? Gerard says, unfortunately, I am married to Thinkorswim. Okay, let me know when you develop a Thinkorswim version. Well, actually, Gerard, you can use your Thinkorswim live data for free on NinjaTrader charts at no extra cost. So once again, I would, before you decide not to get involved, you'd be missing out on something that is totally free. You can contact the people at Pro Trader Strategies. Just email them or call them if you'd like, and they can show you exactly what it would take to have you set up with Thinkorswim. It's really that simple, okay? So if you want to learn more, just call someone here at the offices or email us, and we will show you and set everything up for you, okay? And also, if you had technical issues or if you had to come in a little bit late, just email the people at Pro Trader Strategies or call them, and they will send you a link, okay? Let's see. Sriran is asking, can you put me in touch with a longtime user of this system so I can ask a few questions to get comfortable with? Well, the only long-term user I know that's been doing it the most is me. So, so we don't give out any of our members' information because that's not our policy. I don't think you'd want us to give out information about yourself. So as I've shown you here, I've shown you current setups, I've shown you signals going back this past year, going back this past few hours. Okay, I've been using this. If you're not sure and you don't trust me, do a Google search on me. Look at all the people that responded positively on Google about my career and what we've been teaching. Okay, but the person who I know has been trading this the longest, who is still trading, is me. And so you can ask me any question, and I will truthfully answer all of your questions. Okay. Oliver is asking, what is the current time? I'm not sure if you're asking what the current time is now or current time frame. If you're asking about the time frame, you can virtually use this on any time frame, okay? If you're asking about what is the current time for this package, remember, we're only going to have this 2-for-1 attendee special or the / discount for just the next day or so, okay? Abdullah asks, can I use the PET D to find a buy or sell signal? Well, you need a strategy to tell you a buy or sell signal. What the PET D does is confirm it, whether it tells you it's okay to take that signal or not. Okay, so that's what we're offering you today. We're giving you a great strategy, a candlestick strategy, and the PET D is just confirming it, telling you if it's okay to take it or not. So remember, the PET D is not a strategy. It's not a system. It's just a trend identifier. So you need some type of plan that tells you when to sell, when to buy. The beauty of the PET D is it just gives you the confidence to take it, okay? Zeltko is saying, oh, hi, Zeltko. He's a member of ours, and I'm very glad to hear from him. He says, I have the PET D, and I already use it with very good results. My winning score is 72%. Thanks again. Well, thank you, Zeltko. He's a great new student of ours, not very relatively long. He hasn't been with us for extremely long time, not in terms of years or anything. So for anyone who was asking, here's a current customer of ours, and he's used the PET D, and like he says, he has roughly 72%. Everyone uses it differently, though. You don't have to use it in the same capacity. I mean, you can use it to confirm, but you can also use it with another strategy. You can use it with some of the trend identifying aspects we teach in the course. So thank you, Zelko. That's a nice testimonial coming from someone. Let's see, McKay is saying, how does this apply to spread trading? Well, you know, I'm sorry, we can't really answer that because we don't teach anything with options or type of spread trading in that nature. So I'm sorry. All I can tell you that wherever you get a setup, whether you're going to be buying or selling, the Pet D can really help. But in terms of spread trading, where you have kind of a hedge, which I don't personally trade or we don't really teach courses, it's hard to apply that. But remember, once again, you're getting a full-fledged strategy with this 2-for-1 discount. Gerard is asking, can you give us a rough idea of what strategy number 5 entails? Well, without giving too much away, Gerard, all we can say is it's based off candlesticks. So if you're a candlestick trader or if you want to learn how to trade candlesticks, it's based off candlesticks. But what we include in the course, this is just strategy number 5, we tell you where to enter, which I didn't go over today. We tell you a proprietary entry point. We tell you proprietary stop placement points. And we tell you proprietary exit points, all different levels. So you can take whichever entry, exit, stop placement you want. So these are all in the course, and once again, we give you all this information, and then we help you to decide which ones you want to take. They all have high levels of consistency, but you know, someone may want to take the trade and get in and out very quickly, whereas another trader may say, no, I want to stay in as long as possible. So we teach you all the different techniques and tips on how to do that. That's all, based off of a proprietary candlestick patterns, okay? LU is asking, what is the cost again? Well, remember, the cost usually is close to $3,200 for both of these. We slashed the price for this candlestick combo down to $19.95. Now, we realize that still may be too much for certain people to make in one large lump sum, so you can construct some type of payment plan. All you have to do is contact the information I have right here in front of you, Pro Trader Strategies, email or call them, and what they will do is put together a payment plan. So you just have to put a small deposit, and you can be up and running in a matter of moments. You can get all this information, okay? A few more questions here before we have to sign off. Frank is asking, do we need confirmation for entry? You can if you want to, but we teach you more advanced ways if you do not want to have confirmation. For those of you who are not familiar with confirmation, that's simply a technique we use for entering, and we can apply that. That's all in the course. We teach you all of that within our courses, okay? B. Mizzou is saying, thank you hugely. God love you. Thank you very much. Well, you're more than welcome. Daniel, the last question is asking the definition of an engulfing candle. Okay, well, let's just take a bullish engulfing candle. And remember, you can request this recording because I go into more detail in this in the recording. But it's a 2-bar pattern, whereas a bullish engulfing pattern is the first bar is a down day. The second bar is an up day, all right? Now, all we want to see is that the second bar's open to close range engulfs the first bar's open to close downward range. That's it. Now, if you want more information, a little bit more explained in detail, kindly request a link to this recording, and I'll go into detail and explain it, and you'll see the slides there, and it'll be very simple to follow. Last question here. Paul asks, if we follow your courses and lessons, are we committed to use the Pet D, or do you teach to trade without a Pet D too? Oh no, that's a great question. In closing, all of my strategies, all of my different techniques for trading do not require that you need the Pet D. But if you want to really ramp up your odds for success, the Pet D is the way to go, because the Pet D is just confirming or making you in sync with the trend. All of our strategies are based off of being in sync with the trend. Okay, the Pet D is the best way I know of how to be in sync with the trend. So why wouldn't you want to trade with a Pet D? In addition to that, you can trade any strategy with the Pet D, so it doesn't have to be one of mine, and it will, in my opinion, increase your odds for success. So why wouldn't you want to do that? It's like ordering a meal without dessert. I mean, you want to have the dessert to make it, a full meal. It's the same way. Or ordering a meal without a good glass of wine. You want that. That's part of the meal to make it even better. It's the same way with the Pet D. The Pet D will only increase your odds for a successful trade. Okay, we stand by our work. our guarantee is basically, if you're not happy with it, you can exchange within 30 days for any other product we have. So we'll give you something else if you're not entirely happy. But most of the people are extremely happy. As you saw, one of our students here just said, he's increased his consistency ratio up to 72% in his personal trading. So you can't beat that. That's a great statistic for his personal trading. In closing, if you're truly interested about taking your trading to the next level, I strongly urge you to take advantage of our candlestick combination. You're getting two tremendously powerful techniques for the price of one. In addition to that, we've also included payment plans. So you can contact the people at Pro Trader Strategies here, the information right in front of you, and you can be up and running as early as today. You can be reading all the information and applying all the tools. So you can be up and running and then email me with any questions you have trading the Pet D as well as strategy number 5, okay? In closing, I want to thank you so much for attending today. Please contact the people, or if you want a link to the recording, that's the information you need. But if you're ready to jump on board and become a student of mine, the link to the 2-for-1 discount is in your right in the chat box, as you see there posted. You can just simply click that on and it will take you to the sign-up page, and you'll be up and running in a matter of moments. I want to thank you so much for attending today. I look forward to all of you becoming members of the Candlestick Combo and becoming students of mine at Specialist Trading. Thank you so much for attending. I shall see you next time. Bye-bye.